Hey everyone, welcome back to my channel. So today I have the pleasure of welcoming a very good friend of mine, Paul McGee, Trade Forex with Paul. Go check him out on YouTube. And Paul, I've welcomed you onto the channel. We're going to cover everything Forex, and the reason why I've brought on Paul, and if you know, for anyone who is looking to get into Forex, I think things are so complicated, right, Paul? And what I really like about Paul's way of learning, teaching others is he's very layman's term and anyone can understand it. Paul held a session a while ago where he brought on some of the group members that we're a part of, and it was really easy to understand. And that's what we're going to be talking about today and going through those beginning steps of getting into Forex. So if you have any interest in the foreign exchange, then this is the video for you. So firstly, Paul, welcome onto my channel, mate. Bit of an intro, if you don't mind.
Yeah, sure. Thanks for having me on, Aaron. So my name is Paul McGee. I'm a Forex trader based up here in Shropshire. I started off trading Forex probably about 4 years ago now, coming up to about 4 years ago. But I first had my dabblings in stocks, stock trading from the age of about 19 or 20. I had a gap of maybe 5 or 6 years because I just kept on losing. I was looking back, I could look back and see my old trades. They were just all the beginner's mistakes. You know, there was a recession when I first got started, and what did I invest in? Banking stocks. Like everything that I could do wrong, I was doing. I was selling when the price was dropping. I was buying when the price was rising. And then all of a sudden, maybe 4 years ago or so, I've never paid into a private pension. I don't really believe that it's a good investment for me to do, to give my money to somebody else to handle. But I did have a fair bit of money, basically, which I was to and fro thinking, should I now start investing in a private pension and start basically stacking it back up? Or should I learn to trade myself and just basically do what these guys do, but they take a big fee? And much like everybody else, like what you hear, like the first 3 months, I pretty much blew up my account. It dropped from roughly 15 grand down to 7. And then I retopped it up to about 12, dropped that down to about 4. I just kept on destroying my account. But gradually, over the last maybe 2 years especially, I've been profitable with my account all months but one, so all but 1 month. And that's been pretty decent for me. But it has been a long road. Made all the mistakes under the sun, looking at all the retail trading methods, used things like baby pips, followed it religiously. And I swear it was made by the banks, which are designed to basically screw you up and send you in the wrong direction. But yeah, that's a real brief intro, probably not the best intro, but it's, first couple of years, absolute heartache with Forex, a lot of frustration, but it's gradually got there to a really good level now. And it's got to the point where I'm just launching a training course as well for a few of the guys from the accountability group actually have joined it. Just trying to bring these guys up from a standing start to profitable within 3 months is my target. So we'll see how it goes.
Awesome. No, brilliant intro, mate. And what we're going to discuss and go through the steps is sort of understanding what Forex is. Is it as complicated as some of the, I suppose, educators out there? Because if you were to hit Forex into YouTube, it seems very analytical. You have to understand acronyms, terminology. It seems quite complicated. And this is what I want to dive into, because I know that you break it down very, very easily. And for anyone, again, I say this, looking to get into Forex, do reach out to Paul, because you will soon see that he's very good in the sense of breaking it down so we can all understand it. So what I want to start with, Forex is essentially a trader's game of the foreign exchange currency. But can you just sort of give us that, maybe a bit of an insight to, the whole picture of what Forex is, and then we'll dive into actually trying to get into it.
Yeah, no worries. Yeah, so basically Forex is foreign exchange. It's the pairings or the matchings of two currencies. So, my primary currency, which I trade, is the British pound US dollar, and then the euro US dollar. So the euro is probably the most commonly traded pair, which means that your spreads and commissions to your brokers are the cheapest because people are exchanging it a lot more often. The way to see the Forex market is it's extremely complicated in comparison to things like stocks and even crypto. And the reason for that is the amount of leverage which is involved. Now, leverage basically is the amount of money that you're going to be borrowing from your broker per transaction. With stocks, with blue chips, for example, let's say like Facebook, Google, Rolls Royce, to an extent, like you can expect some of these stocks, like if there's a dip, oh, it's all right, price will come back. You know, you can't say that with Forex because your account will dry up by fractions of moves. So you've got to be right to an extent more than you're wrong, especially on your risk reward ratio when you're putting in your trades. But Forex is overcomplicated by the plethora of crap which is out there, which is typically called retail trading methods. Now, you've got to be trading on the same side as the banks, because these guys are the ones who can fund the market. They can actually move the market. Little retail traders like Aaron and myself, you know, maximum trading account with retail traders, typically about £10 million. We're not going to be moving the market. You know, you need billions to move the market, and that can be achieved through leverage as well. Long story short, Forex is complicated until you get a winning formula, and it's literally just refining that formula as you go along. It's all based around market structure, market liquidity, and supply and demand. It doesn't have to be more complicated than that. And then it's just a case of finding a correct sort of entry criteria. And again, it's all been trial and error. When I first started out, I didn't even think to use YouTube. I didn't think of using YouTube to learn. You know, I wasn't even learning off anything. I was just looking at the charts for days on end, just flicking through different time frames, different currencies, trying to see if there was any sort of pattern or correlation between anything. You know, Japanese candlesticks, for anybody who understands what they are, it's just a way in which you look at the chart. It's not a line chart which you use. I didn't know they were called Japanese candlesticks, so I was giving them different names and all sorts. So, you know, absolutely from the ground up, went through a lot of hell to get to where I am. But now it's getting to a point where it's consistently profitable to a really good level where I can actually teach people. So, but yeah, Forex is, I found that it was probably the hardest to learn out of all the different sort of things which I could trade. You know, could look at futures, could look at options, could look at stocks, crypto. Forex was the hardest. And I thought, okay, I'm going to focus on Forex because everything else should be a breeze. In essence, it's not, but it kind of is.
Yeah. So when we start out in Forex, so someone watching this thinking, okay, I'm going to get into it. I'm going to try and figure out this minefield that you've got to go through of these YouTubers who are quite big now. So they've got a big marketing budget. So they're popping up on every advert saying that you can replace your job in a very short period of time and, you know, do it all from the luxury of sitting on a beach on an island somewhere. Obviously, if you've got any sense, that's not the truth. Certainly not within early years of learning Forex. You know, you don't need to sort of be involved in Forex to really know that's not the instant truth. So someone starting from the beginning, Paul, where do they begin? Like, do they open up a demo account? How does the process of actually getting into Forex, where's that start line?
Yeah, so first of all, before you even open a demo account, you need to try and figure out what it is that you're looking at, because a stock chart or a Forex chart is completely different from a line chart. So the first platform which you should go on really is something called TradingView. And that's basically just a charting software which we use. And then you've got a different broker software as well. So you can go type in on Google Forex brokers. You know, the one which I use is Pepperstone. There's IC Markets, which is nice and big as well. Both regulated brokers. They'll only give you leverage of 30 to 1 if you're in the UK, which isn't very good, but you can go down the unregulated route as well, but your money isn't quite as protected. Nonetheless, there's different brokers that you can go with. But when you're first starting off, the main thing that you need to really look at to understand and to learn with Forex, with stocks, whatever, is market structure. When you think of a chart, like think of like an emoji on your phone. You know, if you type in chart on emoji, it comes up with that shape, doesn't it? It's like leg up, little leg down, leg up. That's it. That's a market structure. Okay, it's as simple as that. It's understanding the flow of the market. Within that, you've got supply and demand, which is the sort of follow on to that, and then market liquidity. It doesn't really go much beyond that. When I first started out, I was looking more at patterns and shapes and, like, you know, ascending channels and descending and asymmetric triangles, just a load of rubbish. Really, it's the flow state of the market. Where is the market? Use a higher time frame as a confluence. So, always try to use the daily chart or the 4-hour chart as a bit of a confluence to try and understand really where the market's going. Because you'll know that you might have like a 100 pip move or a 100-point move, just for people who understand stocks. But if you can get an entry with like a 2-pip stop, that's a 50-to-1 trade that you could take. Whereas if you're using a stop loss of 25 and you're just sticking to that higher time frame, you're only going to get a 1-to-4. So it's bits and pieces like that which you're going to develop over time. But to get started, just understand market structure. It comes down to market structure. The market expands and it retracts, and then it expands and then it retracts, and it's completely cyclical. It may not look like it's cyclical, but zoom out onto a higher time frame, and as you zoom out, or if you zoom in, it does the same thing over and over. I don't even, like, this is going to sound a bit strange, but I don't even know if the Forex chart is even real. Like, I don't know if we actually influence the charts. Did banks actually influence it? Because it seems to happen over and over and over again. It seems almost too good to be true once you kind of get that little algorithm. It's sort of like an understanding for the market. Once it clicks, you can't unsee it. And from there, it's game time.
Yeah. So, starting into the learning process, what's the sort of key things that someone needs to learn? Because I suppose this is something that many people will look at, and there's so many elements to Forex, but what are the first sort of 2, 3, 4, 5 things that someone needs to sit down and begin learning as the basics in order to go and open that demo account, in order to actually, start making strides? What do they need to learn?
One of the most boring things that you've got to learn is understanding what a stop loss is. So a stop loss, really simply, is if you are wrong with a trade, you give the broker, basically through your system, through your platform, permission to close the trade at a loss. And the reason why you do that is that if you don't put a stop loss in, you're going to end up getting a margin call if you're too far wrong. And what that does is it stops you from trading anymore, and you have to close off that position in a loss. It can run down your account down to 0 if you don't use a stop loss. Next up is risk management. Now, I usually or typically trade with a 1% risk on my account. So when I first started off, my account was £500. I'd be risking £5 per trade. It was really as simple as that. So if I was trying to win a trade, I was trying to win at the time a 3-to-1. Now it's like 5-to-1. So I'll be risking £5 to make, at the time, £15 on a win. And therefore, I didn't have to worry too much about being 50% right. I could be about 33% right and still make money, or still break even at least. But the next bit really is, again, like what I just mentioned before, market structure. Just understand how the market works. Are you in an uptrend, a downtrend, or stuck in a wider range? There's multiple ways to trade all sorts of different things. I go through in the YouTube channel in quite a few different ways. How to trade breakouts. Got a new video coming up soon, how to trade reversals. But it's all looking at these, they're called points of interest. These key areas where you're expecting that price could react from, where there's some extra liquidity or there's supply or demand in the market. It's where you're expecting the big boys to come into play and reverse the market or push it in the continued direction. But Forex, I might be overcomplicating it, but it is actually really simple when you look at the raw basics: supply and demand, liquidity, and structure. But if you're looking for like a free resource to go to try and get started or try and get a bit of an understanding of the basics, I would say go to babypips.com. Bit of a strange name, but only read the modules 1 to 3. They've got like it's a free, I think it's called the School of Pipsology. It's like a 10-part course or something, but only read sections 1 to 3 and then jump over to my YouTube, because basically 4 to 10 or whatever it goes up to is essentially the retail methods, which I've spent the best part of this last maybe 7 or 8 months trying to unlearn all of it, and it's taken ages, and it's affected my trading negatively, because I'll be looking at a chart knowing what it should be doing, but then in the back of my head, I'll be thinking, oh, but all my learnings for the last few years have been saying it should be doing this. And I've got to switch that bit off. When I've got doubts coming in, I've got to switch that off. And it's really, really difficult. So if you're going from like a standing start, the first 3 sections where it explains to you what is a pip, how is a pip calculated, stop loss, risk management, to an extent, psychology. Now that is absolutely huge with trading, but that's something which you'll learn a little bit beyond those initial stages. Psychology is probably about 85-90% of my trading now. Well, everyone goes through that stage where it becomes 85, 95, 90-ish% of your trading, but it's becoming less and less because I'm just not bothered if I lose anymore. So it's like the wins sort out the losses, so it doesn't matter on a win rate with me now. But it's psychology comes into play. But if you're going to get started, just jump onto Baby Pips, the first 3 modules on there, and then jump over to a reputable YouTuber and have a look. But it is hard to spot the reputable ones from the marketers because everyone's got better thumbnails. We were talking about thumbnails earlier today, Aaron. I'm absolutely crap at it. With YouTube, I'm not very good, but you can normally spot a real trader from a fake one because the fake ones will talk about, oh, look, there's a pattern over there. There's a head and shoulders. There's this, there's that. And it's like, they're just spitting out, marketing words that they're not actually suggesting what to do with your trading. It's all like, oh, price should do this or it could do it. Like, you can spot them a mile off after you've gained a bit of experience, but when you're first getting started, I can see how it could be a minefield. And I'm slowly sort of deleting some of my older videos where it was the retail stuff like this as well. So I just don't want to misguide people.
Yeah, I think that's half the issue, is it's such a minefield and there are so many now big YouTubers. And of course it's like, for anyone watching, I don't know if people can relate to this, but it's like when you go and buy a book on Amazon or you go and buy an item, you look for the one that has the highest amount of reviews. And it's very much the same with YouTubers. When you search Forex, you tend to look for the one that has the 2.5 million views opposed to the one that has 2,000 views. But that again, so what Paul has just said there, I totally agree. It's in all industries. It's got to be about that quality content rather than going for the person who's got the big name. So profitable traders, I mean, how long, to give an insight, again, this is all about kind of those getting on the ladder of Forex, is what does the time frame look like? Because I think there's this perception that once you start it, and it's certainly marketed this way, is that you can be a profitable trader pretty quick. Whereas we're not going to go into it in this video, maybe we'll do a part 2, but even I know that, to build up some decent funds, to get sponsored, to be able to play with some serious money in order for you to make money, will take a long time. Like you said, you started with £500. You're not retiring on £500 within the first couple of years. So just to give that sort of insight to someone thinking, okay, but when can I become profitable? What does that time frame look like from start to putting some money in the bank?
Yeah, so being profitable can be as quick as, could be 10 minutes if you pick the right direction in the market, but being consistently profitable by yourself, knowing where you've gone wrong, how you can improve. In reality, it took me 18 months to start breaking even on my account, and that wasn't necessarily like getting back to a level playing field where I started off. That took a bit longer. But for me to start seeing consistent gains on my account, that took about 18 months. But I was completely self-taught. With the correct sort of guidance, I reckon, really with my own stuff, I think 3 to 6 months, or my target is 3 months with at least 2 of these guys in the group. I want to make them potentially full-time traders by the end of a year. So it could be their core income. And just to prove that I can do it and then roll it out to everybody else. But in reality, people will be, a year to 2 years. There's too much stuff online where people are just saying like, oh, I was profitable within 6 months. Well, maybe they were, good for them, but it took me a hell of a lot longer. There's a lot of journaling that you've got to do. You've got to be writing down every single trade that you take. You've got to analyze it. You've then got to go back over 100 previous potential trades just like that to see what the statistics were like and then stick to a plan. Now, I never stuck to my plan. I kept on taking the trades, not writing them down, and guessing, basically. It was just stupid. Like, I wasn't guessing, but it was, it was going on what I thought was the correct thing to do based on the previous trade. Well, that one won. Well, the problem with the market is that it's all based on probabilities and statistics. Even if you've got like an excellent entry criteria and an excellent exit criteria, doesn't mean that it's going to win every time. It can't win every time. The market isn't structured like that. You might be winning 30% of the time. I know it sounds crazy, but it might be winning 30% of the time. But if your risk reward ratio is 10 to 1, or 1 to 10, sorry, so risking 1 to gain 10, who cares? It doesn't matter about a low win rate, as long as your losing streaks don't cripple your account. So it does matter a little bit, but I've forgotten the question.
it was that time length. No, you were answering it. It was the time length of when you can become profitable. But
sorry,
obviously,
I went off onto a sidetrack there.
No, love it. It's all value.
Realistically, I think with the right guidance, about 6 months to be self-sufficient. But in reality, for most people, it's going to take a year to 2 years. If you do what you're meant to do: journal, review your trades, back test effectively, and then forward test a strategy. I would say set up a demo account just so you can understand how the software works. Also, put the amount of the demo account, so put it down at £70,000 or £100,000. And the reason for that is, it's very different from what you can actually put into the account for the majority of people. But when you start going for prop firm funding to just feed your own account to begin with, you might get what I got, which was I just completely froze. When it came to place the trades initially, I was looking at $100,000 in my account and thinking, I'm placing a huge trade here. What if I'm wrong? Like, I just saw the figures, it went from looking at percentages to actual money. And I was like, that hindered me. That first trade, I think I put it on Instagram about this time last year. That first trade, could have gained like 22% on the account. Like, I would have passed my challenge within something like 17 minutes, but I didn't pull the trigger because I was terrified of seeing that size account effectively. So set up a demo account. A demo account is basically just a fictitious account. It's using fake money, but it still allows, you to place your trades as you would normally. Then I would say put in some small amount of money, maybe a broker's minimum, like 200 quid, maybe even £500, so you can still adjust your sizes a little bit. Stick to a risk management plan as well, so risking no more than 1% per trade if you can, and go from there. But the reason why I would say put real money in is you do need to feel the emotions of trading. When you're trading a demo account, there's no real emotion. If you're wrong, well, you can just reset it. It's like, oh, guys, look, I've done all right. And I swear that's what a lot of YouTubers do. They're just using demo accounts and it's just a load of crap. Whereas you look at the real guys and they'll usually show you their account. So, but it's a case where literally you need to feel the emotions, because you need to feel not just when you're losing, because we all know what losing feels like, but you need to know when you're winning. Should I cut my winners? Really, no, you shouldn't. But am I being too greedy by holding on to this for too long? Is it going to turn against me? You've got to get all of those thoughts out of your head. And that is a very, very gradual thing. And that's what stops people from being profitable early. A lot of people understand market structure. A lot of people understand how the market actually flows. But the problem which hinders them is the psychology aspect of, am I holding onto this trade for too long? Price has turned against me by 30%. I was up 10% on my account. Now I'm up only 3%. Should I just close the position in a profit? Oh, I don't want to see my account go into the red. Should I be closing this now? You close the position, it shoots off without you. And it's like, oh, I should have kept hold of it. Like, everyone makes these mistakes. I still make these mistakes. You can't just snap out of it, but going through the correct process, especially from a standing start, is going to help you so much. And especially with a little bit of guidance with somebody like myself who's been through it, it's going to guide you in the right direction, I think.
Awesome value there. And I think there's going to be a lot of takeaways here. For what I'd quite like to do as we wrap this video up now is, I think it'd be great to actually maybe make this into like a part 2, part 3, where maybe we go through in some more detail and just sort of, for those that are progressing and moving forward, that they can continue with that value. And just as we finish, Paul, where can people reach you and get in contact, mate?
Yeah, thanks, man. Yeah, so I'm on Instagram not often, but sometimes I am. Like, I go through sort of like spates where I'm on always, and then I'm on not at all for weeks. But it's at real Paul McGee. There's only one of me. There are several fake accounts out there, but they'd be better off just learning how to trade these guys rather than scamming people. I won't reach out to you first, just so you know. You got to reach out to me, so I won't be asking you for money and stuff like that because I don't need to. But it's and then you can find me on LinkedIn as well. I think it's just Paul McGee one or something, and also YouTube, which is Trade Forex with Paul.
Awesome. Well, thank you so much for coming on, mate. You're a part of our group, and huge value in that. And I'm really excited that you're going to take on a couple of the members and walk them through that as well. So everyone that's watched, I hope this has offered a lot of value. I'm sure it has, especially for those looking to take the first steps into Forex, and we'll definitely follow up with a part 2. And until next time, we'll see you all very soon.